Hello everyone. I'm going to explain the trades that I took in the last 2 days. Yesterday I'm not posted any trades just because I was not good, not feeling well yesterday. Yeah, there is some issues going on with me. So today I'm gonna share everything. So okay, just uh I'm going to explain the 2 days market moves. First I hide this. This is the daily time frame. I explain yesterday's market. This is the yesterday's move, Wednesday. Price sweep this low and going higher. When I was in the market, it was inside the range. So yesterday I expect the fair value gap is not tapped or filled yet. So I expect the price come and fill this fair value gap and going higher. So I expect some lower prices. I going to all the way down to 1 hour. So, so in 1 hour you can clearly see the last of 4 days from Friday to Wednesday. Every time price come on approaches this level and get swept, comes lower, getting swept, comes lower, getting swept, comes lower. Fail to break this high. It's extreme resistance point. So this is the projection. This is the trade. This was the trade that I took yesterday. So according to me, this is my low resistance liquidity run. As soon as price sweep this low, I entered my position right here. I'm going to explain everything in 1 minute. Just my entry time frame is 1 minute. So according to 15 minutes, it's clearly a structure shift but high and print a lower high, which means a low resistance liquidity run. Most of the time it's going to hunt this point. This is the area price generate liquidity in order to hunt in the future. Structure shift, good displacement to the downside after sweeping all those lows. This low, everything has been swept here. So once I get sweep, I go to the 1 minute time frame. So this is yesterday's entries. So it comes all the way down, sweep, start to go higher. According to me, this is my first leg in higher time frame. If I go to 15 minutes, this is my first leg and this is my second leg. Mostly if you entered in the second leg structure shift fair value gaps, it's most of the time work really well. This is just because to wigging the fair value gap which created in the seller side or the buyer side. So try to enter in the second leg. So this is a sweep invite the buyers to get in and takes them out. Then price gives a real movement to the upside. Mostly I like to this kind of moves. This is also really good, but this is more valid in my perspective. So there's a good sweep in this 50 minutes and every time frames. Yep. So this is the 50 minutes time frame after the structure shift. So this is my first target. I just use my standard deviation from this point to this week to this week, and it's projected right here. Um, it's projected right here, but I put my target exactly at this point, just above this high, inside this fair value gap, and I'm very confident with this move. So once I get the structure shift to the upside, it means once I get the candle close in 1 minute from this swing high. I initiate my first position in this fair value gap here. My first position here. My second position after it get displaced and comes on approach this breaker point. I entered my second position at this retracement point. So I kept my stop loss at this level. So my every stop loss was at this point. My first position, my second position. I expect my first TP here, my second TP at this or this highs. So price beautifully played all the way up to this level and come all the way down to take my stop. Later, I identified one thing. My standard deviation projection was totally wrong. I need to project from this low to this high. This is the last low which made the high. This is a structure shift. So I need to put standard deviation from, if I get in front of you, like if I put my standard deviation from this, sorry, template, standard deviation. Okay. Yep. If I use my standard deviation from this point to this point, it's beautifully projected this high, right? And this is the place I need to close my position. Exactly at this point. Exactly at this point where the price getting reversed. But instead of this high, I take this lows. So next time itself, I don't want to take the wicks. I take this wick, the lowest price, and to the body at this point. I don't want to cover the wig. Because of the wig, it's projected here. Projected here, I put my star target here. If it's projected here, I most probably put my star target at this point, somewhere around here. I most probably get my it might achieve my TP. So because of that mistake, I was I was not able to book my profits here. So as soon as this is where we can enter our pyramiding position. This is my first position. This is my second pyramiding position. After giving this much move to the upside, price come and sweep this internal. This is the internal sweep according to my, not according to me. It's according to ICT. This is the turtle soup. So once it happened, you can change your stop loss from this point to this point. Once it happened, there is no reason for the price to come to this point. So I move my stop loss to this point in every account from this area to this area. Once it swept and start to displace higher. After some point, price flip every fair value gaps and going higher. I was very confident after this movement, but unfortunately, it's start to get reversed. Come and take my target stop loss at this point. But what I was did that day was I put one entry stop loss right here and one entry stop loss at this point. So I always like to consider one thing. If market prove me wrong, just prove me completely I'm wrong. I don't want to get stopped at this point and it gets swept one more time and going high. I don't want to like that. So just because of that reason, I keep one stop loss at this point and one stop loss at this point. If if the price sweep go higher, it's okay. I take this stop and I like to take this prof take this stop getting protected, or else if the price come and take my stop and proved me I'm wrong, I'm totally happy with that. So this is the trade that I took yesterday, and it was minus 0.5 hour in three different accounts. And this is the trade that I took in today's session. I go to daily time frame to explain it in a clear way. Just hang on for a minute. So clear sweep. So once the price getting swept, we can expect the higher prices, but I'm not um, identified in the morning session. But this is the reason why the price going higher. Put displacement to the upside. and yesterday's 2 days lows getting swept. So most probably the dollar liquidity went higher or there to the upside. After that, I directly went to one hour. If you go to 1 hour, if I put all those things, no, it's kind of messy. I can explain it with bar chart. So in 1 hour, if you see this, my goodness, just give me a sec. Just give me a second. First I tell you this. So in 1 hour, you can clearly see this is the first leg after taking all those liquidity, because why the price coming lower? This is the actual liquidity point. This is the breaker which made the structure shift to the upside. Low, high, low, structure shift. Price approaches this level, getting sweep, just getting rejected here and going to take all those liquidity to the upside. So this is the exact liquidity zone. Once the price take all those liquidity, it start to move higher. But this is just a manipulation move in order to give in order to wigging the fair value gap. This fair value gap this fair value gap just getting wigged and pushing lower. This is the actual sell side liquidity has been taken. But I that's the reason why the price move efficiently today. So after sweeping this level, price go on to give the structure shift to the upside. This fair value gap that holding the price now get flipped to the upside, and which created a good fair value gap in 15 minutes. If we go to 15 minutes, it beautifully created a fair value gap here, right here. So low after sweeping all those things, price swept, structure shift, displays higher, this fair value gap at 1 hour getting flipped and created a beautiful fair value gap here. So this is the place where I focused in the morning session. Just give me a sec. Uh, okay, so I go to 15 minutes. This is the today's market movements. This is a structure shift and this fair value gap, which I targeted yesterday, getting flipped to the upside. So I was more bullish once I see this candle close to the upside. And this is the recent fair value gap that created low structure shift, displays to the upside. This is the liquidity areas. Getting tapped, go higher, getting swept, go higher. So in the morning session, I just directly went to the 1 minute. After seeing all those things, I went to 1 minute. I expect the price to be this highs, which means this highs. Okay. So this M15 fair value gap, this is a structure shift, the low which made the high. Price just tap to go higher and come one more time sweep. This is the internal sweep. Go and take all those targets, come lower, and one more time price sweep this level. One more time price just sweep, move higher. As soon as this fair value gap get flipped, as soon as this fair value gap get flipped to the upside, I entered my first position right here and put my stop loss at this low. This is the low of the 15 minutes candle, I guess, if I'm not wrong. Yep. I kept my first stop loss at this point. The fair value gap, this is the thing. I like to see this fair value gap to hold and keep a stop loss at this candle low. So I entered my first position after as soon as this fair value gap getting flipped, I entered my first position right here. I expect the target this equal highs and identified this already placed tapped and sweep one more time. This is the second time swept. So as soon as the price displays all the way to this point. I don't like to see the price coming to this low and sweep and going higher. So I moved my initial stop from this point to this point. Okay. From this point to this point, and it stopped me out right here. Here I lost almost 0.3% in my live session. So it stopped me out. Once it stopped me out, I went to 15 minutes. In 15 minutes, the 15 minutes fair value gap still holding the price. So as soon as I identified the fair value gap getting hold, I going to 1 minutes again. 1 minute time frame again, and identified this price getting swept. This is also sweep one more time the internal getting swept. This is the structure shift. As soon as this fair value gap get flipped to the upside, I entered my position at this fair value gap. At this fair value gap, in this premium level, I entered my first position, my second position here. Put my stop loss at this point and expected 1:2. I'm not putting this equalize as target because it's not give 1:1 or 1:2. It is not a good risk reward ratio for me, so I keep my target at this level. It's a so kind of random level because this is my confident move. I should close my position right here because this is my confident move. But for this for the sake of risk reward ratio, I keep my stop loss at, sorry, TP at this level. And um and identify one thing. This might be our next targets if the price take these highs. So yes, after flipping this fair value gap and up, as soon as the price approaches this fair value gap, entered. Now I identified this is a great level because this fair value gap getting flipped. I can draw this point to this point, a box, and mark this fair value gap. Once the price goes above this high and once the price approaches this level, I can enter and put the stop at this low. So I don't need to put my stop at these points because price already tapped, swept one more time, swept one more time, and swept the last time. Hereafter price not coming to any levels because in 1 minute if you see that low, this is the structure shape aligned with the fair value gap. Price beautifully getting rejected and holding this level. This fair value gap beautifully holding the price and push higher. This is the structure shift. This is the fair value gap get flipped. As soon as get flipped, I enter here. Beautiful entry. I'm not closed my position right here. I was a bit greedy. I'm not greedy. I like to see 1:2. At least I this $30. I expect $60 here. 1:2. So at the same time, in if I went to 15 minutes, I can clearly show you one thing. Yep. At this time frame, it's keep on getting swept highs. This high is getting swept, this high getting swept. So I don't like to see this. So I don't like the liquidity area has been swept because more if it gets swept and give displacement to the downside, the most probably the draw going to be lower. So I don't want to be in that reversal trade. So in order to avoid that, I keep my stop loss. As soon as the price approaches take these highs, I change my stop loss from this point to uh this level, especially to the break-even point. I move my stop loss from this area to the break-even point, and price beautifully go and take this high, come and approaches the fair value gap again, and tapped my break-even point, go higher, sweep this high, comes down, and one more time sweep this internal, holding this fair value gap, started to skyrocket. Once the time and price aligned, price started to move dramatically to the upside. At this point is 10 o'clock. So the message from the today's session is nothing but stick with your stop loss. Don't change your stop loss frequently without getting any further confirmation. Today I changed my stop loss from this point to this point is a bit valid because once the price sweep this internal, I don't like to see the price coming below because it's a good move to the upside. I don't if it get reversed, it might not go higher. I thought like that, but it's going higher. So this is the actual sweep of the day. It's once it gets swept, once it's flipped, it's if we're going to 5 minutes, I can clearly show you. So here. So yep. This fair value gap, this big fair value gap, flipped it to the upside and actors inverse beautifully. There is no candle close below these fair value gaps. This fair value gap literally holding the price, literally holding the price. And in 1 minute, mm, yep. And in 1 minute, you can clearly see one thing here. This fair value gap get tapped here, right? Tapped, going higher. Come and again getting hold in this fair value gap, right? This is the breaker, come on approach this fair value gap, going higher, sweep this high. Again come down. These are the generated liquidity in order to hunt, comes down, sweep this low, sweep this low, sweep this low, and this fair value gap and this inverse fair value gap beautifully hold the price, which means good rejection, close above this level and start to pushing upside. So all you need to do just stick with your initial stop loss. If you identify this, once you enter the market, you have to have the optimum stop loss level. Once you activate the trade, you have to ask the question, where can I keep my stop loss? What might be my optimal stop loss level? You should put the stop and stick with that unless or until the market itself prove you are wrong. Unless or until you are not supposed to change anything, just stick with that. So if I not change anything in this trade, most probably, if I stick with this with this stop loss, there is no price come and approaches this stop loss. And again, my second entry, there is no price come and approaches this stop loss. All because of my unwanted manipulation of stop losses made me fail today. So once you entered, just wait for the price to start playing out towards the direction. So if I stick with this stop loss, not putting here, most probably it getting swept and give one more entry here. So I might enter. This is my first position, and here I can enter my second position, my pyramiding position, and as soon as the price come and sweep this low, as soon as I identify this area getting hold, which means rejection, swept, I can enter one more position here, keep my stop loss at this level, and like to see fantastic move to the upside. If I just hold this initial entry, since from my initial entry I was totally right. So this is the mistake. This was the mistake that I made in that today's session. So so I have to correct it in the future trades. I have to stick with my initial stop, and yeah, trailing the stop is not bad, in my perspective, but still, if I go to the 15 minutes, there is no candle close below this 15 minutes. So which means uh, I don't need to afraid about anything because that's the place where I that's the reason why I enter the trade, because the 15 minutes value gap needs to hold in order to be bullish. So as long as holding the price, we I don't need to worry about anything. So that's the mistake that I made today. That's it. The beautiful trade to the upside. These are the mistakes I made. That's fine. Today most of them is not following the low getting swept structure shift, the usual model. It's kind of a bit advanced for me. Like me and my friend took the trades, so it's a bit advanced for me. Like as soon as it get flipped, as soon as it's sweep and get flipped, I entered, put my stop optimum point. I expect some one more sweep consecutive like that thing, the proper structure, but not happened. Here also, it's not give me a proper structure. It's still once it's swept, it's kind of accumulated here, expanded to the upside, flip the firewall gap. Again, once it gets flipped, I enter. Beautiful entry. So every time you're not supposed to look for the same kind of thing, you should act according to the market movements. I don't suggest that you can do by experience. You can identify where the market heading towards. So stick with one or two entry patterns. So this is my second entry type. My first entry type is low swept structure shift, the usual one. And this is bit advanced. Once the price getting swept and flip any kind of arrow gap, I can enter. So this is the two type of entries that I followed these days. Okay. We'll see in the tomorrow session. I'm going to trade in the morning New York session. I will definitely come live so we can trade together. Have a good one. Peace.